Hello, and welcome to My Finance Teacher. Have you heard that the International Atomic Energy Association has raised its projections for nuclear power for the fifth consecutive year? Nuclear power is now expected to at least double into the 2030s. Isn't that quite a bit of a difference from the 2010s, when the nuclear power was out of favor, especially after the Fukushima disaster, and the uranium price has dropped from over $120 per pound all the way down to only $20 a pound. Since then, though, price has, it has quintupled from $20 poking above $100 in late 2023, early 2024. At the moment, though, the price is around $80 per pound. So looking at the longer term outlook, I am very bullish on uranium. But in the shorter term, perhaps some sort of a caution is advised over the next several weeks. Let's have a look at more details of that. And what I'm talking about are these cycles in uranium. Those who have been following my channel for quite a while know that I am a cycles guy. I do observe cycles in uranium market lasting for around 162 days on average, at least measuring back from middle of 2019. Of course, sometimes these cycles are stretched quite a bit longer than that, up to 249 days within this recent history. On average, though, just under half a year for this average duration of a cycle, and the current ongoing cycle is already 89 days long. So we're perhaps getting close to the midpoint of the cycle, and there is a chance that the top has already occurred a little to the left side from that midpoint. Yes, nobody does know the future, and uranium might still give us a higher high before coming down into the cycle low. But what I'm suggesting generally is that the best money has already been probably made within this ongoing cycle. Some caution is advised over the next few weeks, with a very nice opportunity to re-enter sometime in the next couple of months, perhaps in the next 3 months, at the end or at the low of this ongoing cycle, as we count cycles from the low to the low. Plus, looking at the pure technicals, during this cycle, uranium price has reached a relatively strong support resistance zone that has been respected for at least a couple of months, based on these cycle lows and cycle highs, going all the way back into early 2024, and we of course are talking about $84 per pound of uranium. During this ongoing cycle, uranium has already tested that resistance zone, bounced back down from that resistance, suggesting that it's just that much more likely that the uranium cycle is about to start its declining phase into the cycle low. And I'm not suggesting that the decline will start today or tomorrow. There will be some bounces. We're likely in the middle of a bounce right now, as the price is bouncing from coming close to this 50-day moving average. But we see that uranium price has already repeatedly poked above pretty wide Bollinger Bands, going into that most recent top testing $84. And looking at the 14-day RSI, we see that it has reached all the way to 86, pretty deep into overbought area. Talking about overbought, the uranium equities, uranium producers, this is URA, those are overbought as well, with RSI at the moment around 82, again quite deep into that overbought area. And of course, the cycles on URA do match the uranium cycles pretty well, with an average duration of around 160 days. The ongoing cycle, though, is a little shorter than the ongoing cycle on uranium as well. The URA cycle is now 56 days long, but again we do see a repeated poke above relatively wide Bollinger Bands, and accompanied with RSI going pretty deep into that overbought area. Again, some caution is advised here, especially if you look at the weekly chart of URA, going back historically all the way back to 2010, and focusing specifically on the 14-week RSI, so a relatively longer term RSI here. We see that it has never been as deep into overbought area as it is right now at around 83.5. So yes, nobody does know the future, and just like gold keeps going higher and higher, uranium and uranium equities might continue pushing further, especially into 65 zone. That's based on this resistance from early 2024 high. But nevertheless, most of the indices do suggest that some caution is advised, especially looking at the market sentiment, in this case the ratio of miners to the commodity itself. I've talked about this chart in some of my much older videos, and historically, going back at least 10 years here on the chart, whenever this ratio drops below 0.4, that means the miners are quite a bit oversold versus the commodity itself, and there is a buying opportunity. Although these buying opportunities, they might stretch for a full year, for example, as in 2024. At the moment though, we're above 0.7. That's the level where the miners are overbought versus the commodity itself. In fact, we're close to 0.73. Historically, again, looking back at a decade at least, the miners, whenever they do reach this level, haven't really stayed as expensive for too long. Hence, perhaps taking some profits here while still maintaining core positions is not a bad idea. And that, by the way, is exactly what we discussed with the members at myfinanceteacher.org yesterday. So for more frequent updates, make sure to join us. That's again myfinanceteacher.org. Among some other recent interesting discussions is a quick look at consumers. The consumer confidence at the moment is beaten up badly. The consumers are even less confident at the moment than they were in the depths of that global financial crisis in 2008-2009. So looking out into the long term, there might be some potential in the consumer goods industry. And in a tangential topic, talking about consumers, McDonald's was somewhat interesting a few days ago, being a relatively inexpensive restaurant, an inexpensive meal option. It's dancing to its own tune, not always following the general stock market. As you see at the bottom of the chart, we see S&P 500 here. So again, we've identified a potential re-entry point into McDonald's around 297, and it has since gained over 2.5% in just a couple of days. That's perhaps a bit of luck here. As I often like to mention, nobody does know the future. I share my opinion with you guys based on the patterns and how those patterns have developed historically. Again, for more frequent updates, join us at myfinanceteacher.org. Have a terrific Thursday. Bye bye.